Hey, Ian, another edition of the Ian Cast, this time from Florida on my end, where I'm visiting our publisher to work on a couple of special presentations that folks will get to see and hear in the coming weeks and months ahead. But a lot going on our end with Tesla, Bitcoin, cannabis, and even the stock market. So I don't know, where should we start? Should we start with Tesla? Let's start with Tesla because
Yeah, for sure.
what I mean, forget $1,000, which we said was our target.
Right,
Tesla could go to 2,000. Hey, it could go to 2,000 this week for all you know.
right. Yeah, I mean, it's been on fire. I was just talking to Amber on Monday in her market talk about what could happen after these earnings. And I said that, any sell-off, purely profit taking, the company is on fire and they're only getting better. And, we talked kind of a little bit about 4,000 because that's like one of the price targets we've brought up in the past. And I think it's very possible because their business is so small compared to what is going to be in the near future, not just their car business, but also their solar business. They're barely even kicked off. Their self-driving car business has only been partially integrated into a couple of their cars at this point. But one of the big things that I got out of that earnings report that I haven't heard many people talking about is that they expect these three gigafactories that are under construction to be finished within 12 to 18 months.
Right. And that's like always how Elon is. It's always full speed ahead on everything.
Right.
All at the same time. And, this is why things at Tesla move at a completely different speed than at any other company. And they move on all fronts simultaneously. They're moving obviously on the production front in terms of everything, so they're already producing, which is a Model S, Model X, Model Y, Model 3. Then in development is the Tesla Semi, which, we haven't seen, and a Cybertruck, which then the gigafactories, are going to have to support. Then there's autopilot that's there. And then something that very few people think about is all the development that they are doing in terms of batteries. Like unthought of by many people is the small but constant improvements that Tesla is making in the range of the cars. Like, for example, I have a Model X, and when I bought the Model X, the maximum range was 295. Today, the Model X maximum range is 355. It's big enough to matter.
Yeah, for sure. And they're building way more charging stations. They're just growing on all fronts of their business. And their energy storage business, another thing from the earnings report that I didn't see really much about from the news, is that their energy storage business, the deployments of the batteries and things like that grew 61% from the first quarter. So, I mean, that part of their business is on fire. Elon said that, solar roofs they're going to be installing 1,000 per week by the end of the year. So, that's another, several $1 billion on an annual basis that they're going to be adding not too far from now.
Yeah, it's a very, very unusual company in the sense that, and we've said this before, and I've written articles on this like as much as I think 2 years ago, which is that you're really buying into like today's equivalent of like the utility company in terms of being able to distribute energy, ExxonMobil, I don't know, the refinery energy space through the battery, and then there's the element of mobility, and then on top of that, there's also the element of artificial intelligence and neural networks and AI through its autopilot. So many people, continue to compare Tesla to General Motors and Ford. Yeah. And, we've been telling people, it's like, that's a terrible comparison because they Ford and GM do not compete with Tesla. I mean, there's really, at this point, even on the mobility level, there is no competitor to Tesla. No one has advanced autopilot. Google's autopilot is all simulated miles. All the others largely have simulated because they don't have cars on the road. And then in one Ian cast, we talked about how Tesla's approach is different than what Google and everything, which they're going for like intensely fine mapping, which means that you have to have like everything mapped to the last centimeter, versus Google really using neural network, artificial intelligence, pattern recognition, pattern intelligence to say, hey, how do people go through a certain driving situation relative to the conditions? And if you can use that, if that solution works in one country, you can see that it scales across many countries, which is more difficult up front. However, to globally roll it out is much easier later.
Yeah. And the fact that Tesla is already incorporating the self-driving features into their current cars, I mean, that's like getting your customers to basically improve your business, because whenever someone uses that feature, it gets downloaded to the machine learning system that powers basically that whole feature from Tesla.
Yeah, I mean, it's the essence of artificial intelligence. It's also the essence of sort of, that thing where, if you have enough data through there, you have the ability to make the best decisions. In terms of the stock, I mean, people continue to write us in, and Tesla's been in our portfolio, I don't know, probably a year and a half, 2 years. I think our the recorded cost in the Profits Unlimited portfolio is something like $350, something in that range. And obviously, a lot of folks have made a lot of money in it. And people continue to focus almost exclusively on Tesla. And we do want to say, listen, this is a market that is full of opportunity. There is no need to just focus exclusively on Tesla.
Right.
I mean, it's a great company. It does a lot of things, and its stock market value, market capitalization is $300 billion, and we believe it can go up much more. However, there are other companies that are smaller that can go up even more.
Right. Yeah. It's all a matter of scale. I mean, Tesla not long ago was like $60 billion or even less than that. So, right. I mean, the companies that are smaller and have the kind of the similar growth prospects are more likely to go up more at this point. Like I said, there might be some profit taking in Tesla because it's up like 600 or 700% in a year. But long term, I mean, they're really they look unstoppable in several different big, multi-trillion-dollar market fronts. So, I mean, 100%. The market for this company is ridiculously big, and I think that really they're just getting started. They've only got a couple of cars being mass produced. They're barely off the ground with their solar roof, so it's only going to be higher growth ahead.
So this is a good segue because so one thing that was achieved as a result of the quarterly earnings was that Tesla has now met the standards for inclusion into the S&P 500.
Right.
For consecutive quarters? Is it 4 quarters? I don't remember what the standard is.
Yeah, it's 4 consecutive quarters of profitability.
And I forget, I've not checked recently what the short position in Tesla is. I think it's still as much as 20% of the float.
Yeah, last look for me, it was a couple of weeks ago, but it was over 20%, yeah.
Which, I mean, nonetheless, people love to hate this company. And, let's transition from here to the stock market. And also, a company that's like, as much as Tesla's kind of hated in many ways, even though its stock price keeps rising, it has a huge base of people that love it. And there's also equally large base that hate it. And at the same time, there's then companies like Apple that are beloved really by certainly the financial media. And, let's just mix this discussion up in terms of like, the sort of movements in the stock market, which, let's say the market, which is defined by the S&P 500, the Dow Jones Industrial Average, the NASDAQ Composite, the NASDAQ 100. For those of you who are new, these are all the big major indices. And the indices are essentially like a basket of stocks weighted either by their stock market value or market capitalization, or else in the case of the Dow, it's the actual stock price. So it's a price-sensitive index, which is why it's very easily manipulated, and it's often used by people to manipulate sentiment, to drive sort of fear, or sometimes to increase sort of like the greed factor that you feel like you need to be in. And the one thing that, when people look at, like, say, what happened yesterday, which is that, I think the NASDAQ opened up big, right?
Yeah.
And then you had a big trail off. And then you look at, well, what is driving that? Well, I went and looked at Apple, and Apple stock was down, like, I don't know, like, quite significantly yesterday.
Yeah. Yeah, it was the big ones. I think Microsoft just reported earnings. They're seeing profit taking too. That's another $1 trillion company. So those big companies really can have a big effect on the overall market. But what you see is that the S&P 500 has basically barely gone up since I think early June. Like it was at this level, I think on like June 4th or something. And meanwhile, a lot of stocks in, the America 2.0 sectors are up like 20, 30% or even more from that point. So those stocks going up don't really have that much of an effect on the S&P 500 or the NASDAQ because they're so small. But that's where the real opportunities are.
100%. And, the Profits Unlimited equal weighted portfolio is up, I believe, over 30%. I don't know what it was as of yesterday. We usually do the year-to-date measurement at the end of every week. But the end of last week, it was up over 30%. That's because we don't have Apple in our model portfolio. We don't have Microsoft in our model portfolio. We do not have Amazon in our model portfolio. We do have Tesla. However, we put Tesla in as we said, what was Tesla when we put it in? Probably about 60 billion.
Yeah, exactly. Yeah. So that's like multi-100% up in like a little over a year. Yeah. So
right. And, and then there's other interesting moves that you can see that there is this continuing back and forth transition going on between America 1.0, America 1.5, if you want to put it, because I consider Microsoft to be America 1.5.
Yeah, that's
not quite 1.0, not quite 1.2. They do have a cloud business that I like, but then there's the Windows business that I think is ultimately going to go away.
Yeah.
And is going to be superseded by any number of things. I think Chromebooks, if I go look at what young kids are using today, they're largely, the vast majority of people are using Chromebooks. So somewhere between Linux and I think, whatever, runs Chromebooks, some form of Android, I believe, is going to take over because it's low cost, it's widely implemented. Innovation always follows through the vector of low cost, convenience, more access. They kind of interact with each other. So, and Jacqueline, who's our amazing editorial writer and helps us out with all of our issues and Profits Unlimited, others, was asking me, hey, Paul, what do you think? Do you think that Microsoft is a America 1.0 company? Like, perhaps it's time to add Microsoft to the blacklist. And I'm thinking like Microsoft and Apple, they're kind of in that middle ground. I think Apple is more 1.0 because of what we have been now talking about for several years now, which is that they have spent, I believe it's in excess of, was it nearly 300 billion? I think I cited a 200 billion number. I believe the number is 300 billion.
Yeah, in share buybacks.
That's right. So this company has taken its jackpot earnings from the iPhone and chosen to focus its corporate intent, its entire focus on buying back stock. In other words, people say, well, Paul, hey, Ian, well, they generate all this cash. What do you expect them to do? And it's like, well, we had this discussion, which is that technology innovation is cyclical. And once you have three big hits like they did with the iPod, the iPhone, then the iPad, it's kind of like, destroys the incentive to innovate within the company. And then that drives a down cycle that is very expensive to resuscitate. And it takes time, effort, energy, and a lot of money. And they have spent $300 billion, which they could have spent on God.
Yeah.
I mean, and you mentioned a deal, Tesla. You mentioned a deal. You said SoftBank was trying to sell them a piece of ARM.
Yeah.
Which is a custom chip maker. And you would think that given what the world is going to be in terms of the amount of computing power to develop artificial intelligence, blockchain, really pretty much every, even the continuation of Internet of Things, or even to facilitate additional computing power for robotics or any of these things. I mean, 300 billion
Yeah,
you could get a lot of value for that.
exactly.
But instead they have just really, their focus has been on their stock, and they've got in many ways, people think of Warren Buffett as being a hero investor. However, for Apple, for them to have a stock focus, I think is pretty bad. And I believe that the market, until sort of Apple and Microsoft become slightly bigger weights, I believe that America 2.0 stocks, that's where you want to be. The S&P 500, like you said, is not even positive for this year.
No. Yeah, exactly. And the thing with ARM was pretty crazy because it wasn't even the whole business. It was just a part of it. And you'd think that a company like Apple, which doesn't really seem to have that much up their sleeve for the future, would want to get in on that. But they turned it down, and then NVIDIA was like immediately like, hey, we're interested. Like there's demand for these companies, and for some reason Apple is just like ignoring it. And they're focusing on the short term by just buying back their shares and propping up the share price.
They're too busy there in Cupertino watching the stock price, rather than focusing on innovation. And the thing is that I bring this up because obviously Apple's still the number one stock in the S&P 500, still the largest contributor to the Dow, and still the largest contributor to both the NASDAQ 100 and the NASDAQ Composite. So people will say, "Hey, Paul, why did the market go down? What's going down?" Well, look, I mean, anytime Apple goes down, it's going to take those indices down.
Right. Exactly.
Yeah. And on those days, our stocks will also decline. However, on the up days, our stocks jump higher. And AMD is a great example. It's something we've held in the portfolio for a long time. Also a multi-100% winner for us over time. And this is a stock that is eating Intel's lunch, which is another stock that's on our blacklist. And just to define for folks, that's a list of stocks that we put together in a special report that you get with our America 2.0 pick as well. And if you want to watch our America 2.0 presentation, click on the strong hands that will show up above me. I believe it's my left hand. I'm at a hotel in Florida visiting my publisher, so forgive me if it's on the other side. Just look for it, these strong hands, and then you can sign up for Profits Unlimited, get the blacklist report. There's 100 companies that we think really represent America 1.0, and they're going to be going away. And then one pick that we believe represents the future of making things really all over the world. And then, of course, our entire portfolio, including Tesla, AMD. You can see the picks that we've done. But AMD is a great example. I mean, I don't know if Apple uses AMD chips, but AMD's Ryzen chips, I believe, are the fastest chips on the market.
Yeah, they blow a bunch of other companies away with computing power chips. Yeah, it's incredible.
Yeah. So I mean, we do want to say we're positive even on the S&P 500. However, the rate at which you're going to get gains, because there is a cyclical recovery underway that is going to benefit a lot of companies that are in the S&P 500, that are in the NASDAQ as well, and even in the Dow. I even saw, the other day, even like some of the laggard companies, even the banks are like starting to go up now.
Yeah. And travel stocks, things like that.
Right.
Got destroyed. I don't think it's going to be anything sustainable. But they went down like 80%. So of course there's going to be some rallies here and there.
Yeah, I mean, the thing is for us, we want our stocks to make new highs and continue to make new highs. And that's how you generate multi-100% winners. And we think there is going to be a cyclical recovery in the travel stocks, even in the chemical stocks and probably the banking stocks. But we can also see that you look out past 5-7 years, many of these industries and sectors have no future. No future at all. No future at all.
Exactly.
All right. So we were still positive. And there will be a general upward move in all of those. However, America 2.0 stocks, which is where we are exclusively focused for the most part, that's the place where you want to be. And, last comment on this, you did see that yesterday that small cap and mid cap stocks, these indices were up yesterday.
Yeah. The Russell 2000 was up. Yeah.
Yeah. So, I mean, that'll tell you that separation, I believe you'll continue to see that even when the stocks, because those big indices being dominated by essentially 5 or 6 mega cap stocks.
Yep.
All right, we've done that. Let's go to Bitcoin. And we've had some chatter in our Slack channel about what's happening with Bitcoin. And you've been telling me for some time, hey, Paul, these alts, non-ETH alts are like on fire, multi-100% winners. And now it does look like the big boys, Bitcoin, Ethereum, Ripple. What else can we put in there? Bitcoin Cash.
Litecoin.
Litecoin. They're all starting to move, and concurrent with an announcement as well from Grayscale.
Yeah. So, Ethereum for sure. That was up like double digits percent yesterday. I'm not sure if it made a new 52-week high, but if it didn't, it was close. It's gone up to around $300 a couple times over the past year, and then gone down again. I think this rally is for real, just because of the supply demand, difference of Bitcoin, with Grayscale buying a bunch of the Bitcoin up, like everything that was mined, literally every single Bitcoin that was mined plus more after the halvening, shows that the demand here is real. That's what's going to drive the value. And if sentiment around Bitcoin is good, sentiment around crypto in general is going to be good, because Bitcoin is kind of the proxy for the blockchain technology investments. Ethereum is more like, DeFi, digital banking, digital insurance, things like that, where you have smart contracts involved. And then you've got all the tokens on the Ethereum blockchain. Ethereum itself, I think, is around $30 billion in market cap right now, which is, to me, really low, because, there's hundreds, if not thousands, of projects going on the Ethereum network, where you've got all these different, like, amazing new technologies coming out. If you're a startup in crypto, the Ethereum platform is where you're going to develop your project and your token and things like that. So it's kind of like, by buying Ethereum, you're spreading your money out into a bunch of different projects in a way.
Right.
The price of Ethereum might be more stable than the smaller ones, but that's not necessarily a bad thing, number one. And number two, it's kind of just like buying an ETF in a way, where you're just getting the benefit of a lot of different companies.
Yeah, I think that when we looked at the ETH tracker, I believe we found that there were in excess of 1,500 projects on the Ethereum blockchain at that time. Yeah. And I'm certain it's bigger. And then there's other ones that are out there. Ripple's out there. Lumens are out there. I think you've talked to me about Cardano being out there. But if you're going to put the world's information pretty much and all of our sort of, identity data, license data on blockchains, we're going to need a few blockchains. I don't think one will do.
Absolutely. And you're seeing that in Ethereum, because I think, transaction prices for the Ethereum network, those fees are up like 10x since the beginning of the year. So it's getting crowded, and they're going to have to scale. That's going to be a big thing for them going forward, and that's a good thing too, because it shows that a lot of people are putting money and time and resources into crypto and blockchain, and these technologies are not going to go anywhere anytime soon.
Well, and not only that, we were talking about banks and insurance and the old financial sector, the America 1.0 financial sector, and we think that a significant amount of that, while, there's a few fintechs that including Lemonade that went public recently, and Sino that went public recently, and some of the others, and then there's PayPal and Square and out there. However, a significant part of that market capitalization is going to go into crypto, and is going to zero out those old guys. So, we think, we've put out targets for Bitcoin of 50,000 for this year, 100,000 in the nearer term, and then we believe the next peak is going to be, in the Tim Draper sort of range, 250, 275, something like that, which is in the 3-year time frame. So I'd say 2023, 2024, something in that range. So 3 to 5 years, something in that range. So we're still BOP, bullish, optimistic, positive on crypto in general, Bitcoin, Ethereum, because we can see the future coming at this really fast. Yeah. And people are talking about Wells Fargo or stuff like this. And I'm like, oh my God, forget this. I mean, or insurance companies, many of whom also have been kind of devastated by the current crisis. And you just think that in the future, like, there's so many parts of our economy that are just completely going to be revolutionized by by crypto, and one in particular, housing, is on fire in the United States. And I was just thinking, like, just imagine that if we had smart mortgages, we had fractionalized ownership that was on the blockchain, how much faster the stuff would go.
Yeah, it would be like, pretty instant in terms of buying a house, and things like buying a car, like things that involve a lot of paperwork that people just hate to do. Takes a lot of time and effort. And, smart contracts are going to make all of that a lot simpler. It's also, there's no middleman. So there's nobody trying to price gouge you in the process. You're not going to have all these extra fees that you do, with like insurance, home buying, things like that. So it's better all around. And it's only a matter of time before these become the norm.
And so to transition to cannabis, which is our usual roundup, so that you put up this article from CoinDesk, and maybe we can provide folks a link to that, which had interesting stuff for crypto, interesting stuff for fintech, and also for cannabis. But let's quickly go since we're on crypto, which is that it was the OCC, which is a regulator of banks. They set sort of parameters for what banks can do. And the headlines were like, banks can now custody crypto assets, and they can deal in crypto assets. They can now take in crypto assets. I'll tell you, most banks ain't going to do anything about it. But more importantly was that it also allowed companies that are in fintech to operate over multiple states without having to get state-by-state approval, which is great for PayPal and others, and Square and others. And then it also allowed for crypto payments to actually be accepted all over the country, which is also positive. So I know lots of people are like, Bitcoin is going to be accepted. We think Bitcoin is largely going to be a store of value, and these payment things are going to happen through dApps and DeFi and all these other movements within crypto. So this rule, which has been put into place, really allows for pretty rapid adoption if you want to actually implement the solution. So it's a big deal. And then the other thing that this article shows, and it's in this regulation, is that it says it allows for banks to deal with any company that is essentially legally incorporated, which now is also means that cannabis companies, which have been locked out from official banking, can now actually go and open accounts, and banks have no longer take on any legal liability. In other words, it's essentially, in a way, kind of like legal approval for banks to deal with cannabis companies. And so, they're making it easy from perspective of the law and banking for cannabis to do it. So now this really opens up the cannabis business, because one of the big hindrances for cannabis has been that they don't have banking facilities.
Yeah, exactly. And that comes like at a perfect time for marijuana stocks and companies, because right now, some of these are in big rally mode, especially the US based ones. Planet 13 just made an all-time high. Trulieve Cannabis just made a 52-week high last week. Curaleaf is right up there. So these US-based marijuana companies are like on fire, and I don't think it's going to be long before Canadian ones follow suit. Just based on that rally that we saw last May, where Aurora Cannabis went up like 250% in 3 days, and the Green Organic Dustbin went up like over 150% in those same 3 days. That I don't think that was a fluke. And I've said this before, but these companies, the selling is done, and for what it's worth. And the buying at this point, it's only going to get bigger. These companies are trading at like super low values compared to, what they're currently making in sales and what they're expected to grow in sales. And just, they're getting to expand into the United States and into other markets that are bigger. So the future is really bright for these Canadian stocks as well. And it's going to drive up, the MJ ETF, which I've mentioned before. I still see, huge upside for that this year. I said 100% at the beginning of the year, and I wouldn't totally rule that out yet even. It's a long way from here, but things can change really fast when you got.
We have seen a lot of stocks move very, very fast in
Right.
Extreme Fortunes, which is our small cap service, and even in True Momentum, our mid cap service, and even in Profits Unlimited, where generally we have bigger stocks. What we have seen, Tesla, like you said, has moved up 700%. And, so these tiny stocks could move up really a few thousand%, it's, because they've just been bid down to such crazy prices relative to the future that is unfolding. In other words, the demand for cannabis continues to rise, its use continues to rise, and just the pure transition from illegal to legal itself represents a massive opportunity beyond the move from people sort of, preferring cannabis, other psychedelics over the old things of wine, beer, spirits, tobacco. That shift is still very much in place. So, there was also a couple of other companies that we've seen starting to make 52-week highs, which, just so everyone knows, like that's often a good sign when you see a set of companies starting to make new highs, in the market. That's a sign that the whole sector is starting to get bought up. So we're still BOP, bullish, optimistic, positive, pretty much on all the things that we covered here, America 2.0 stocks, Tesla, Bitcoin, crypto in general, and cannabis stocks. And with that, Ian, I think it's time to end the Ian cast.
All right, sounds good.
All right, you get to say goodbye first. Now I'm going to wave everyone goodbye from sunny Florida.
All right, everybody, have a great weekend. Happy Friday. Stay safe.
Yeah, this is Paul saying bye.